Hi, Mr. Zia. Thank you once again for joining to NDTV Profit. The big focal point of the report was on the Mumbai market. If you look at the affordability index, you said that this is the first time that we are seeing this below the levels of 50%. Firstly, just for viewer context, give us a sense on what this affordability index is and how Mumbai, which was at the levels of 50 to 52% before, has now come down to 48%.
Great. Thank you so much for inviting me here on this platform. It's always a pleasure to interact with you all. So talking about affordability index, first of all, we are tracking it for last 15 odd years, and I'll come to a little later the backdrop of the index per se. But what is this index? It's all about two sides of it. One is the price of apartments or residential real estate. On the other side is the ability of a buyer to pay EMIs, which is directly related to the household income. So together, these are the index. This is the index that we have created and which we have been tracking for last 15 odd years. And mind you, the Mumbai that you're talking about today at below 50%, when we started 15 years back, it used to be 94. The index used to be that much. So the affordability has come so long from 98 to about 48, 94 to about 48, which is a great achievement from Mumbai real estate buyer perspective. A buyer is finding real estate in Mumbai much more affordable. And again, there will be questions, how do we say so? The answer is simple that while in this period of 10, 15 years, the wealth creation has improved, the ability or the salary pay rises and so on and so forth, all those things come up because as I said, it's the household income per annum that we track. And on the other side, it also depends a lot on the home loan interest rate. So the recent cut, the RBI has declared almost 100 bips of a reduction in last 6 odd months. Even that is giving a huge boost to affordability. So when we are adding up all these things, in spite of a price rise of a finished good, which means apartment prices are shooting up, but on the other side, the affordability by way of wealth creation has shot up much more. So in spite of a price rise in the home sales or apartments, prices have shot up, but wealth creation is shot up at much higher pace than this. So net, what we are talking about, Mumbai sliding below 48 on our index, which used to be above 50 all through in last 50 years, a big achievement as you have noticed.
Okay, just for the viewer context now, when we are talking about these numbers, now 40% of a ratio in terms of what the affordability index is, that means that households in that city need to spend 40% of their income to fund the EMI, and this is for housing loan for that particular unit in the city that we are looking at. 50% higher or so is considered affordable. So, Mr. Zia, just emphasizing on that part, now, if you just take, suppose, a person who wants to buy a property, let's say about a ticket size of 1 crore or 2 crore, that we are looking at in Mumbai. The argument is that Mumbai still is very much unaffordable as it comes to the prices that we are seeing over here rest to the other cities. But how, when we take this in account with what is the trend that we are seeing in H1 of 2025, is different when a person is going to buy a property of say 1 CR to 2 CR now versus last 2 to 3 years ago. How is it becoming more affordable now?
Okay, so let me explain this. The biggest differentiator for Mumbai, and this is something which has happened to Delhi in last decade and a half, happening now to Mumbai, is the improvement in infrastructure. So today, when we are talking about a lot of these, satellite places, which I don't want to call them satellite locations because infrastructure improving, the time taken to travel to these destinations have improved a lot. So the whole of Navi Mumbai, where Maharashtra government is right now talking about Mumbai 3, that is also very well connected due to the Atal Setu. On the other side, the old locations of Bhiwandi, Kalyan, and even this side on Vasai Virar and beyond Palghar, etc. In these locations, lots of inventory is coming and people are buying. So actually, something which is differentiating Mumbai from the next highest, would I say, costly market is NCR. And it is very difficult to believe that NCR has overtaken Mumbai as far as luxury segment is concerned. We'll explain it in a few days when we do our next report. But it is important to know that Mumbai does have a huge inventory of below 50 lakh apartments, albeit in these locations, which are today connected with better infrastructure coming into place. This is what had happened in Delhi about 8-10 years back when the metros had opened up. It is now happening to Mumbai. So a lot of these metros opening up, a lot of these coastal road, this, that, and so on is happening to Mumbai. Suddenly, a lot of these locations, which were back of beyond, say about 5 years back, are getting closer to the city. And that is where the apartments that are coming up is adding to affordability of overall Mumbai's index that we're talking about. So while on one side, you will look at somebody buying a 600 or 700 crore apartment, but on the other side, you should also know that the number of apartments sold in Mumbai below 50 lakh is highest in all the top 8 cities of the country, which means that Mumbai is selling a lot of affordable inventory compared to the other cities of the country, which includes Delhi, Bangalore, Chennai, Hyderabad, etc. So Mumbai has the largest amount or largest number of affordable housing transactions happening, which is what we can't ignore. So overall, that's exactly what implies when we're talking about affordability for Mumbai coming down or improving below 50. That means that the overall environment for buying affordable houses in Mumbai has improved in last 5 to 6 years.
Okay, thank you for that comprehensive breakdown that we are looking at. But you described about the 2010-2011 situation where this affordability number at one point was plus 90%. Now, from this plus 90%, we are looking at a number of 48%. Despite the rate cuts and the better infrastructure, these all contributing factors have led to this cut in this number that we are looking at. What are some of the other factors, which we should account for, some of the challenges which were there before and are now in a better position that is aided to this kind of an affordability index, which is now at a better positioning as compared to the past?
So as I said, while we discussed about infrastructure and availability of fundings, etc., it's important to also understand that what we are talking about is not directly, related to what is selling in South Mumbai. As I said, somebody buying a 700 crore apartment, or yes, on the other side, when I spoke about luxury segment in NCR overtaking Mumbai, it is still worthwhile noticing that 50 crore plus kind of inventories that sell in Mumbai is the highest. So net, while these two cities are, fighting with each other to pick up that honor of the most luxurious real estate of the country. But all that is aside, when we are talking affordability index, it is something where the ability of masses to buy a house comes in. Because the person who is buying a 700 or 800 crore worth of an apartment or a 200, 300 crore apartment is not really chasing the home loan to actually fund that purchase. It's actually affordability is coming in because largely that segment which depends wholly on housing loan to buy that apartment is now feeling much better off. And also let's not forget the Pradhan Mantri Awas Yojana, which came in October of 2024, is also coming in. So there are these two factors which are bringing affordability into all over India market, and more so in Mumbai, because this was one market which used to be the most unaffordable about 15 years back, and gradually is becoming actually more and more affordable with every year passing.
Thank you so much, Mr. Zia, for joining and sharing that perspective.